What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily content at Hemi137 as well. And I do provide current events on this channel. So again, if that sounds like something you're interested in, consider subscribing. And before we get started, remember to hit the like button so this message can get out there to all the other people out there who are looking for current events and get their investing and trading on par. Again, none of this is financial advice. This is purely my opinion and for entertainment purposes only. But with that being said, let's go ahead and get this thing kicked off. Even though it was a very short week, we had a crazy week as far as like big unscheduled events or news events that have occurred over the past week. So that is what we wanted. That was our big takeaway for the week. Again, we only had Monday through Wednesday. The market was closed on Thursday, and then Friday we only had a partial day on Friday, which the volume was pretty low on Friday, nonetheless. So to get this thing started out, as of all last weekend, something I did talk about, mention about, was the fact that AI was the big topic of conversation coming into the week, into Monday, because of the fact that there was a lot of drama based on OpenAI and the CEO, and if he would stay on the board or not. There's a lot of talk about what could potentially why he was fired. People still don't know exactly why he was let go, only to be brought back. There's a lot of concern about potentially him developing a tool. The OpenAI was supposed to essentially be a tool that was to go out and help people, and then now it's more so potentially being developed as a potential weapon is a concerning part about it. And so this is something that Elon Musk has pointed out multiple times, that there has to be some sort of regulation when it comes to AI, because AI can, if you see the massive amount of manipulation and stuff that I talk about just on this channel, imagine the AI being control of that and being on that 24/7, and being able to manipulate what you view all the time, and deep fakes, right? They can do videos and pictures and everything else, and those kinds of things can move markets. And what's scary about AI and what it can do, and so that's what Elon Musk is trying to bring up, and I think that's what the big concern is about what the current CEO of OpenAI, and why he got boosted or booted, and then it ended up coming back. So there's a lot of rumors and speculation going on around there. So we'll see what happens and what comes of that. We also had Citibank this week, something I did not list on here, but that was a big news event that dropped the previous Friday after close, that there was going to be some major layoffs. And then come Monday, there was some senior layoffs at Citibank. Coming in on Monday, and there's supposed to be a lot more layoffs coming. So that was very interesting to see that on Monday. I do not have that listed here. Again, there was a lot of big news events that were occurring all at one time. And again, funny enough, it was on a week that was very short. And so when it comes to the stock market, so when we are looking at this, there were one of the biggest earnings that came out, and kind of the close to all the big industry leaders, was Nvidia. And it came out this week. Essentially, that's supposed to be getting a little rough here today. Nonetheless, Nvidia they had big earnings coming out this week. So the previous week, and they have blown expectations out of the water. As you can see, they came in 18.1 billion versus 16.1 billion. The EPS is 4.02 versus 3.37 expected. Their forward guidance was up another 2 billion, which was absolutely crazy to believe. But in all honesty, I do believe there's some manipulation going on there, but I do believe the drive for AI, and essentially you have to understand, we are in a race with AI. And there was a race way back when we were racing essentially against Russia for the moon landing. And we are in the same exact scenario currently with China and this whole boost on AI. And we have to understand that China is way ahead of us on essentially the factories. And that's why we've been starting to build essentially these factories to produce AI and to be able to get up to par. And this is again why Taiwan is so important to us at this point, because we don't have the infrastructure to be able to support the build out of AI like China does and has have had, and so we're playing catch up at this point. And so I think there's a lot of boosting when it comes to Nvidia to some extent, but also understand that I do believe there is very high demand there because of what it could produce, especially in an environment that we're currently in. You're looking for cheap labor and AI. Yes, the initial cost up front may be expensive, but over time, you're going to save a lot of money. You're going to save a lot of, essentially, you're going to have someone working around the clock, right? And also understand that not only will it save you a lot of money, you don't have to worry about the headache of dealing with human and human emotions, right? And so, with that being said, you can do a lot more. And again, it will make you a lot more agile. It'll save you tons of money and potential liabilities and everything else that comes with that. So again, I think the infrastructure being built out right now, which is still going to take a while. I think you still got another year, 2 years for that to really establish itself, just to have the infrastructure in place. And then once it's in place, then you're going to start looking more at, okay, well, what can we do? How far can we take this thing? Ultimately understand that the models and stuff, the things that I've talked about on here before, are important, and they do take time to build out. These AIs just don't come online and then all of a sudden, they're the things that you see in the movies and stuff like that, where they're taking over the world and stuff like that. But ultimately, understand that it will eventually get to that point, but it will take time because these models that these AIs are built out of, they have to learn, right? And so, with that being said, again, I do see Nvidia being a very strong company in the future, and then ultimately understand that a lot of people aren't as close to Nvidia as they currently are. It's not saying another company could come in and essentially bridge that gap, but ultimately they do have a good starting point from the beginning. So it's going to have a lot of other companies are going to have to push harder to get to where Nvidia currently is. But again, they are the number one company in the US that needs to step up if we are in some sort of, again, moon landing race when it comes to AI with China. So we have to put our best foot forward and support them the best that we can. So I can see why, again, these numbers are just mind-boggling how well it's doing in the future guidance for NVIDIA. And I think it's still very underpriced for where it's at and what they're projecting. And even the forward projection on these things on Nvidia, where it was over $1,000 on a lot of different banks. And so again, I think there's some manipulation going on there, but ultimately I do believe it does have a strong use case as well. So with that being said, we had that. So that was interesting to see what happened with Nvidia. And then we do have 22% of mortgages today have an interest rate of just below 3, where in 2019 it was up from 1% of all mortgages. So people are having to sell their homes and refinance with these new 8% home loans, and there was a big uptick in new applications because interest rates came down a little bit. The interest rates don't just get stuck at 8; they fluctuate and may come down a percentage, and people are gobbling it up as they are coming off, right, of essentially selling the home for ridiculous prices. Even as of right now, you have to understand there's a lot of corporations that are essentially just in this housing this current housing bubble that are still driving up prices on a limited amount of supply, but eventually that is like holding a hot potato, and you don't want to be left holding the bag at the end of this whole thing. And so right now, again, it's a lot of investment properties. That's essentially what's being bought right now, because the average person just can't afford to purchase a home right now. And rents have come down, which is a great thing to see. But again, unless supply gets back out there, you're not going to see home prices come way down in a while. So again, something we have to continue to watch. Now, we did also have the Fed minutes that dropped on Tuesday. And the members still agree to proceed carefully. Fed sees uprising of inflation, which again, the heavy manipulation in the last inflation report when they dropped it 34% because of healthcare, which is an absurd amount, just to try to bring down that number. I think it's more so trying to ease into what's going into the election year. Again, we have to remember that Fed sees downside risk and growth. What does that mean? It means negative GDP, which is coming. And again, that number, all these numbers are heavily manipulated. So you can't just read it and then take it for face value. You have to go deeper. And that's why when you start going deeper in a lot of this different data sets, that they are heavily manipulated, and to try to, again, always project a very positive light when in fact it's not. And so you see a lot of these different things when you start going a couple levels deeper, and then it gets even more foggier because they aren't very specific about how this data is acquired, or it's a very small pool, and there's very heavily skewed in specific ways to make it alter, to essentially paint the narrative that it wants to be displayed. And this is something you have to always understand. This is always what occurs. It doesn't matter what happens, but especially in the economy, when you're talking about markets, this is what they do. And so that's why I, again, have this channel, is to try to shine light on things and then try to deal with the probability of these things occurring. And again, I'll ultimately understand there's a very lagging effect. And that's why I try to time specific things. I try to take short swings and stuff like that. I'm a very active investor. That's the way I am. I do take some intraday plays, but majority of the time, my bigger plays have always been the swing trades, because they're not always there. And something you need to understand is that you don't need to be trading every day, unless you're investing. That is a completely different scenario, and you have a plan. But again, I'm a very active trader, and I do swing trades a lot, for the most part. So, and then the other biggest news was in crypto, was in Binance, and CZ ousted, essentially having to pay $50 million fine individually, and then ultimately understand he had to plead guilty for violating the Bank Security Act and other bank laws, and then barred from making any public statements, which I think is extremely important. So whatever they are doing, whatever the SEC is doing with Binance and CZ, I think is very, very shady, given what the current circumstances. And then ultimately, understand Binance had to also pay a fine of $2.5 billion. Again, the U.S. government is looking for liquidity. They're trying to continue to back the regular banks because they don't want people to dump all their money in crypto. They don't want that to happen. And so they are destroying a lot of these on-ramps to be able to do that. And then Binance being the biggest one, they've now have oversight from essentially Yellen to however they can proceed forward. So you also now got eyes all over everything Binance is doing. So Binance can't just go out and do everything, and there's already heavy restrictions on Coinbase on what they do, and they do very well to try to stay up to par with whatever SEC puts out. So they, again, and still have made public announcements, or public they've been talking publicly about it, about how they've done everything, and they've even considered leaving the U.S. because of all the restrictions that there are, and then they aren't getting any direct answers for anything. So again, there's a lot of shadiness going around that specifically, but again, ultimately understand that there's still, you have to watch the actions that are being taken, especially with people, a lot of these people have stolen tons or millions of dollars in crypto. And then you have these agencies that go out and they confiscate this crypto, and then they essentially start have that crypto on hand now. And so they've done this for millions of dollars in crypto. So they are essentially positioning themselves in a very well suited position if we do switch over to cryptocurrency. And again, something I haven't really talked about on this channel, but talking about CBDCs and going digital, and understand where that leads to, and how you have a social credit score. And we've seen what it's done in China, and the massive amount of problems in displaying people that have bad social scores. So people just get ousted from society because of whatever reason, because they don't follow the social credit score. So this is something we don't want to happen, and something that could be very easily implemented if we had a CBDC, as opposed to having a blockchain like Bitcoin or Ethereum or Cardano or anything like that. So these are very interesting times as of right now. So again, there's a lot of headlines coming out of crypto as they are trying to regulate it. So Very interesting times coming up in the next couple of years. Next year, I think in general is going to be a big year. And we're starting to see that in this past year. We're starting to see the steps forward into what's about potentially really going to happen. So this upcoming week, we're getting a little bit more bigger events coming up. Uh, Again, I'm not expecting a lot to happen, but that's not saying big headline events can occur. My biggest event that's going to happen between now and the end of the year is obviously going to go be non-farms, which isn't this week, but it will be next week. And so next Friday, we will get that information. But this week, Tuesday, starting from 10 o'clock on Tuesday, we're going to have Fed speakers essentially all day long. And funnily enough, we got GDP the next day, first thing in the morning. And GDP was out of control over the last GDP. Again, you have to understand that a big percentage of that is jobs that the government creates. They can randomly create a bunch of jobs, and then no one's actually filling those jobs, but they've created these jobs, and so that adds to the GDP. There's still a lot of heavy manipulation on the GDP, and you have to understand that we're continuing to print so much money. If we can't produce that much, that is bad, right? You can continue to spend billions of dollars a day, and then ultimately understand that if you don't have the production or means to essentially compensate for that, you start getting into hyperinflation, right? Then this is where you destroy middle classes and everything else. So GDP is extremely important here. That comes out on Wednesday. We do have the beige book getting into next monetary policy, as that's right around the corner. Again, I don't think anything's going to happen to that. Just going to get, I think the biggest thing that's going to occur from that event is that you're going to have Powell fielding questions after the fact. So, and I think he's going to be very generic, as he's just trying to get through the holidays to see how people have handled the holidays. And I think our bigger event is going to be next year, or beginning of next year, when we kind of get those numbers from Christmas to see how the consumer is dealing. And so we'll see what happens there. And then Thursday, we have core PCE. And then Friday, again, you have Powell talking. He's started to speak at 10 o'clock. This other one is actually at 2 o'clock. This is incorrect as well. I believe this is at 2 o'clock on 2 p.m. on Friday. So that'll be interesting to watch and see what happens there going into the new year. So again, we'll have to see. It looks like they're more kind of setting up for next week with non-farms. And so they're, again, trying to grease skids. If you haven't noticed, over the past 2 weeks, there's been a lot of Fed members just being on TV all the time, talking about interest rates, talking about how good and strong everything is. In my opinion, they're covering something up. And I think things are a lot worse because you're seeing that in the background playing out as delinquencies start to rise, as there's a lot of foreclosures and stuff starting to happen. You're starting to see more houses come on the market, which is telling you that people are in a bad situation. And so again, there's still inflation. Inflation is still there on basic necessities. And that is what matters. And that's why you need to keep focusing on the basic necessities. Yes, inflation is going to go down on everything else because there's no demand for it, because people just can't pay for electricity or the gas in their car, or some of the food and coffee is still very high, right? Like a lot of the eggs and stuff are still very high. Given from the beginning. So to think that it's just going to go away, it's not going to just go away, right? People are working two jobs just to keep up with the basic things. And then something I've always talked about is a hidden inflation, and owning a home is still very high, and HOA fees and all these other different fees in insurance is just absolutely bonkers to have to pay for. And though, yes, if you're not buying clothes all the time, yes, clothes will come down because, again, if they last long, you're not going to pay for new clothes when your insurance bills have gone up 30%, right? And so, and across, however many different insurance bills you have or coverage you have, that adds up really, really fast. And so, again, there's still a lot going on with that. I don't think inflation is far from over. But again, monetary policy is until the 13th, and then that next core is until the 12th. So those will be our last essentially kind of big events before scheduled events until the new year comes. So we will continue to watch that. As far as watch list, again, index has been very, very choppy, and it's grinding down. As you can see, it continues to drop down to 44. So the index in itself is actually very, very low from its baseline. So the fact that it's that low, it's not expecting a lot. So if we do get a huge event to occur that is not scheduled, the index could have a huge move in it for options. So if something again does happen, we will continue to watch that. Tesla has had some pretty big priced in 12 points, which that's why I've been keeping the weekly averages or last week to this week, so that way we kind of understand where it's at. It's still very high, given that we are starting to get into a new earnings cycle here in another week or two. The market may start running up into the back half of the year, getting prepared for the Q4 earnings, which starts in the beginning of the year. So we have to be mindful of that. BA is a little bit higher. The volatility, I think, value has been a little bit stronger again lately. JPM doesn't really move a lot, but it is starting to push up a little bit more again. Again, it's beginning as we go into the charts, you can see a little bit more that these values and financials are doing much better and becoming much stronger again. So be interesting to watch there. Now let's get into some charts here. Now SPX, obviously, ever since we've announced another pause, we've just been straight up again. 4,600 again, as I said, is that level. We're only like a couple hundred points away from all-time highs, which again is at the 48. What is it? The 48.18 is the all-time highs, and we've been flirting with this area. So again, I think if we cannot break this, we're definitely going to try to come back down. At least I would assume that we would still chop into the beginning of the year. Maybe we just float between the 46 and roughly around here to the 4,400 until we figure out what's going on with the new year. Do I think we make all-time highs? They can continue to try to push it, and we could hit all-time highs. But you have to understand it's not sustainable to be able to do that. So you have to understand that there's so much that's being propped up. There's so many tools that are just leveraging, say you have $10 and you leverage that $10, to, let's just say $1,000, right? So that $10 that you have on hand, the banks are leveraging it out times, thousands. They can lend out $1,000 as opposed to that $10, as long as they have that $10. And so they're just creating new tools that are that $10 and continuing to do this, just to continue to leverage the debt that we have. And nobody wants the debt, and people are escaping the debt. This is why BRICS, you're hearing more about BRICS and people trying to get off the dollar. And something I've always said is, every time someone's attempted to get away from the dollar, we've gone to war with them or created a lot of hardships to where they've essentially folded. And you're seeing the same thing. Now the whole world is essentially trying to move away from the dollar. And now we're talking about global conflict. And then not only that, you're also looking at, the whole cryptocurrency push. So you're having an internal war as well, where people are looking, not everybody, but there's a small group of people that are kind of leaning towards crypto, and then also understand that the regulations and stuff and what they're doing, because they don't want people to get away from the dollar. It's not about so much the money, it's more about the control of what you have. So being said, again, not trying to get on another rant, but so we're looking to see what we can do moving forward, especially going into the new year. At this point, we're kind of just prepping for the new year. Again, I don't like this straight up move. We've already been paused. That's why we've been starting to push up the way we have been. But again, ultimately understand we won't price in a recession until we get a bigger event. And you have to also understand that we can start cutting and then we can start raising again. So you have to be mindful of that. This is why it's all very important. What happens next is what the Fed do with interest rates. They continue to hold them, things will continue to get a lot worse. You have to keep that in mind. So as long as these rates are where they're at, they're going to continue. These companies that have to re-up for new loans, they're not going to be able to take the loans. People are going to have to get fired. People are going to have to liquidate assets. That is what's going to happen until these interest rates change. So as long as you're aware of that and what is happening, then you can take these plays how you need to take them, and ultimately understand, like myself, like an active trader, If I'm swinging these things, I'm not going to continue to swing them for the next 6 months when I know that there's a bigger event about ready to occur. If I got 30%, I'm going to take my 30% and then wait and sit on my cash until I find another good position, and then take that position and ride it out, take another 30%, and then just sit on cash and wait, right? You have to be very patient in this type of market. And again, you don't want to be playing with a lot of these small cap stocks, because at this point, a lot of these are holding a massive amount of debts. And if these debt comes to where they have to renew and get new loans, they won't be able to afford the new loans. You're going to lose a lot more companies. You're playing with fire when you're playing with these penny stocks and low cap stocks. This is why I said you need to be focusing on a lot of the larger cap stocks. It may not be ideal because of the money situation that you're currently in, but you have to also understand that a lot of these companies, you're putting your money at risk in these companies that are very low cap. And then understand, if they don't have the means to stay alive, they're going to be ousted over the next year, in my opinion. So again, we will continue to watch this, but we want to watch that 4,600 level. If it does break that again, ultimately we want to see if we can get back down to that 41 level. I just found that it was I said right at this level, if it breaks this 41, that's it, and we're making a new low. And then all of a sudden, a news event, and this thing just skyrockets straight out of here. Not even a red candle, just straight up. So again, they are trying to keep this thing from completely caving by strategically, again, just stripping out small information, and they try to control the amount of information, because again, if you have a whole onslaught of information given at one time, that's all bad. That's how you crash markets, right? And so you don't want to crash the market. You got to kind of sprinkle it out, so people are conditioned to believe that it's not as bad as it actually is. And so the conditioning part is what essentially helps guide the thing lower without actually crashing stuff. So this is, again, the approach they have to use. Again, you don't want to drive panic because you can't control anything. So let's take a look at Bitcoin. Now, Bitcoin's been obviously ripping quite a bit. It actually touched the 39 just the other day. So it's interesting to watch how Bitcoin is climbing. Again, I still think there's going to be a heavy pullback. I don't think the Binance stuff is just the beginning of it. It needed to be done. Honestly, the way it's all being handled right now is an event I talked about that needed to occur. I still think there's more events that need to unfold before we could get a spot ETF approved. I do believe that, and I think whatever that next event could be that could take this thing down, and whether that's Tether or whatever, some other black swan event we're not aware of, could be that. And if it is Tether and they attack Tether, and Tether gets ousted for whatever reason, that could create your Bitcoin pretty heavy. And so you have to be very careful of that, to know the kind of risk that's on the table moving forward. So again, I've talked about this. After this break, you've had this massive selling, so this is essentially filling the gap. So still not a higher high. When you're looking, your higher high is way up here at 48. So again, you're looking at these other levels here. We'll see if this breaks back down and starts pushing back down. But I've liked Bitcoin from the beginning. I like Bitcoin moving forward as the technology is there. You have to be very careful. There's a lot of people that don't want to lose that power. So that's a whole other dynamic you're adding into Bitcoin that's not typically in a normal market. So again, you have to be very careful what's currently going on with that. So let's take a look at Tesla. Now, Tesla has just been sort of chopping. It's kind of building this wedge here. I wouldn't be surprised if we do make a newer low just below 200, getting into the next earnings cycle, which is right around the corner. So again, we're really watching this closely. I think we will try to make another attempt, at least at 200, before the end of the year. Again, we've coming out of that essentially earnings mode. So it's been 4 weeks. Market is starting to push back up, and so is Tesla. So we'll continue to watch this. I don't really see this doing a lot, at least not until we get closer to the new year and kind of see some earnings statements. Again, February, March could be a very bad year, so you have to be mindful of that. So I want to see how this does play. It needs to break the 244 mark, and again, that 300 mark is the level you really need to beat for this thing to start exploding. If it does break that, I think it could really get some gas. But you are creating this newer low, newer high, newer low, potentially newer high. our lower low here. So you may be getting a newer low here and a newer high, but it is a down wedge. So the down wedge, you typically get a big boost to the upside after that. But again, there's still a lot to be mindful of and watch here. So again, all very tight ranges. So this is something you have to be mindful of. Palantir. Again, I think this is a very solid company. It looks like it's a breaking and a retest. So we ultimately want this thing to hold above $20. If it can't reclaim that this week, that could be a concern. It could be crawling back down to the 14. Then again, all depends on events. If we get a bunch of events in a row, this thing could just start cratering and start selling pretty heavy. So we're going to have to watch and see what happens there. Moving forward, I'll take a look at Apple here real quick. Apple obviously will hold 7% of the index, so it's important to watch this one as well. It's just been playing this range again ever since. It's had horrible earnings, and yet it's still a safe haven. So people are dumping their money into Apple going into the end of the year just to try to get some essentially some gains on essentially their investments. So that could be very much what that is. But again, it needs to break the 200 for this thing to really make some gas. Again, I don't know why it's even up, because their sales and everything are bad right now. The only thing that's saving them is they're a well-known brand and people know the environment, and then they have a lot of cash on hand. So that's definitely helping Apple at this point. But again, I think this will see the 168 at some points, maybe even really start getting some sell pressure, maybe down to 155. I have to see moving forward here. So then we'll take a look at BA. BA, again, it's all of a sudden just start pushing up back to that level. Like this never even occurred. That's what's crazy, is like the market actually started understanding what was going on and it was selling off. And then it's like, nope, we're pausing. We're going back up. And so again, this level here, the 218 is a level that BA needs to protect. If it wants to be a bull case, it needs to break back over that. We don't want this thing pulling back in this tight range and bouncing between the 190 and essentially that 220. That's not what we want. So if you want this to be bullish, it does need to break that 220 and hold above that. And again, that 240 level, we already got rejected off of it once. So we want to see how well that does. Maybe it comes back up to 240 and gets knocked back down. We'll definitely have to watch that closely. But this is why I play the ranges to see where we go from week to week. So. And then you also have JPM, which again started breaking some of these old supports here, and then all of a sudden it just skyrocketed back up. So for this thing, really needs to break the 157, 158 mark, hold above that. Again, you got another level up here. Banks don't really move too crazy unless there's some really bad news. So kind of really watching that. Surprised it broke back. This is what I'm saying. This is even any kind of technicals are very haywire. You can tell the massive amount of manipulation when you see stuff like this. The fact that it just broke this, it buttered through it, and then it buttered right back through this. Now this was a huge area. Obviously, it's been holding very well and retested and has held a couple different times, and then it just broke through it, which is normal to see. But the fact that it didn't even reject off of this, it just shot straight through, is a huge concern about the massive amount of manipulation that is currently going on, and all the buybacks and everything that occur to help keep these things up from falling down and actually getting crushed. So again, none of this is financial advice. I'm just out here speaking my opinion and what I've seen in the market and my time in the market, and sharing my thoughts. Again, I try to keep my system very simple. I try to keep it don't try to make it overly complex, because it can get complex very quickly. And then at that point, you make wrong decisions. And so, again, I keep my windows from target to target, understand what my events are, what could potentially play out, and then take risk at that point, given the current situation. So with all that being said, if you did make it this far, go ahead and drop a like button. Till next time, I'll see you guys later.